Earlier this year, the experts thought the Fed would cut rates twice. This week, they flipped to expecting 2 hikes. If you've been waiting to buy or refinance, that change is about you. I am Ron Siegel, Certified Liability Advisor, helping you and your family build wealth through strategic debt management. This is your weekend update for the week of June 19, 2026. The markets are closed today for the Juneteenth holiday, so the figures I'm sharing are as of yesterday's close. Let me start with the change that matters most. A few months ago, the people who watch the Fed for a living expected 2 rate cuts this year. After this week's meeting, they expect 2 hikes instead. This is a big swing in a short time. The Fed held its key rate steady at 3.5 to 3.75%. The decision was no surprise. The surprise was the outlook. Nearly half of the Fed's members now see 2 rate hikes by the end of the year. The new Fed chair also kept it short, with a statement of only 130 words and no promises about what comes next. The message was simple: do not count on a rate cut to bail anyone out. Your mortgage rate is not the Fed's rate. Here's the good news: the headline skipped. Your mortgage rate did not jump the way the Fed news made it sound. That's because mortgage rates follow longer-term trends, not the Fed's short-term rate. The 10-year Treasury, which moves closely with mortgage rates, actually eased to 4.46%, down from 4.48% a week ago. So the rate that affects your home loan held up well. Now to this week's mortgage rates. The conventional is 6.5, the 30-year conventional is 6.58%. The 30-year jumbo is 6.81%. The 30-year FHA is 6.15%, and the 30-year VA is 6.17%. These are national averages from Mortgage News Daily, not an offer to lend. Gas, oil, and your budget. There was relief at the pump, too. A Middle East deal was signed this week, and that took pressure off oil. Oil is now trading around $75 a barrel. Gas has dropped below $4 a gallon, with room to fall further. Lower energy costs help cool inflation, and that is good news for rates and your monthly budget. What this means if you are buying or refinancing. So what does this mean for you and your family? If you've been waiting for a big rate cut before you make a move, this week is a reminder that the cut may not come, and home prices are holding firm because there are still not enough homes for sale. Pending home sales rose 3.8% in May and were up 4.8% from a year ago. That's the 4th monthly gain in a row. At the same time, builders are cautious and new construction has slowed, which keeps supply tight. Waiting for prices to drop may be a longer bet than you think. This is exactly why strategy beats rate, always. Worth your time this week, we have 2 reads that can help you think this through. The first is $400 a month with no plan is $48,000 gone in 10 years. Do the math. The second is the Fed just killed your rate cut plan. Here's the math on waiting versus acting. Both speak right to the wait versus act question on a lot of minds right now. You'll find these along with other tools below the video or on the page on the side of the page, depending on the device you're using. If your tax returns do not tell your whole story, here's something for you. If you're self-employed or own a business, your tax return may not show the full income you actually earn. We have a selection of loan programs built for exactly that situation. The first one to know about is the bank statement loan, which lets qualified borrowers use bank statements, not tax returns, to show income. You can learn more at rsrlinks.com/bankstatement. That's rsrlinks.com/bankstatement. That link is also below the video or on the side of the page, depending on your device. A free tool for your family, KeySteps, is a free platform offering credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps to start protecting your credit today. Next week brings more news. Wednesday, we get new home sales. Then Thursday is the day to watch with the final read on the first quarter GDP and the May inflation report the Fed watches most closely. After this week's shift, that inflation number really matters for where rates are heading. That would be the PCE report. That's your weekend update. We'll appreciate you listening, and we'll speak to you again next week.